A strategy without a number is just a story, and a number without strategy is just maths. This is a huge opportunity. But changing opportunity into a tangible business, well, there's where the rubber meets the road, right? If we want to reach the level of where Vietnam is, we need to take our manufacturing sector from 3% of the GDP to 30% of the GDP. There's no private sector or private wealth creation without proper, efficient, effective public service. In a country where you have $113 billion of GDP, growing with an average of 6 to 7%, okay, and needs dire needs in terms of its young population with all the demographics and the factors that we mentioned. It needs continuous, consistent creation of credit and capital.
Today, we're joined by Mered Besrat, the founder and CEO of Pragma Investment Advisory. Pragma is an advisory firm that has been at the forefront of helping business explore the intricacies of investment and growth in Ethiopia. Mered brings a wealth of experience to the table, having spent over 7 years leading Pragma and its mission to bring about positive economic impact through strategic advisory services. Thank you for coming, Mered.
Pleasure to be on the show. Thank you, Hamanat.
Could you please tell us more about yourself, the inspiration behind establishing Pragma Investment Advisory, and the key considerations or deliberations that shaped the firm's founding? It would also be great if you could walk us through your background and give us some picture as to how your interest grew in the investment world and the challenge you encountered along the way.
So you're going to start with the bigger questions, right? Long story short. Since I was a kid, I was very passionate about going into public service. So up until grade 10, I was thinking of joining Air Force. That was my passion. So I learned it in high school called San Joseph. So I spent most of my times reading newspapers, most of my times studying about the world. So apparently, when I was in high school, one of the greatest things that happened was the financial crisis of 2008. So that sparked a lot of curiosity for me. I was so curious in terms of when I was reading headlines saying, trillions of dollars just wiped out, and there is a police, right? There is an investigation, right? How can that amount of money would be stolen? So that led me to study the world of finance, the passion that I had for finance, and especially understanding the nexus between public service and finance. That just blew my passion for finance. So at that point, I was trying to understand, how central banks works, how money works, how capital market works. So that I was into it, and with my friend, and also we started Pragma back 7 years ago. Our intention was to build a name, to build a reputation. So that's how Pragma started, honestly. So our intention right now is, in the past 7 years, we've advised multinational companies, local investors, foreign investors, mainly more focusing on the financial element in terms of assisting them on investing, raising equity through private placement, or it could be debt financing, engaging with the debt financiers. We have engaged with more than 200 startups and SMEs in terms of assisting them in their business plan, more of, again, focusing on the financial element. We've been involved in a couple of private equity deals. I mean, of course, there was a number of challenges with the macroeconomy, with the security problems, of course, and we have also done quite a number of enormous amount of market entry strategy. And so for us, the way we see it is, as a firm, is where we come into the space is, as a financiers, we believe strategy without a number is just a story, and a number without strategy is just maths, right? So the two things have to balance itself. It's like a soul and a body, right? So if you get the right tune of it, you navigate a lot. So that's what we try to provide for our clients. That's the solution we offer. We're very much pragmatic. just like our name. We have a very deep understanding of the Ethiopian market, the Ethiopian financial landscape, the Ethiopian psyche, the climate, and that's where we come in and assist our clients in. So, to answer your question in terms of the challenge that I face as a business is, I mean, of course, you face a lot of challenges. Don't get me wrong. One thing that keep me at night is cash flow. And you always have to constantly think. And it's a beautiful, painful journey. One has to be very passionate about it, of course, no doubt about that. But I think the biggest challenge was the country itself. To be frank with you, the country itself, because in that past 7 years, I'm sure everybody have experienced it. Since the macroeconomic reform was taken, we've gone into wars. There's insecurity, instability that continuously affect your top line, bottom line, and it has its own effect, right? So yeah, and I think one has to be very appreciative of the journey, because to be successful in business, at least you need to give up 10 years of your life, and that's the discipline. I mean, in my view. Yes.
Thank you. Of course, over the past 7 years, you've successfully built a very reputational entity, Pragma Investment Advisory. But in addition to the establishment process, the challenge, and the paths that you've come through over the past 7 years, we'd also like to know currently what type of services is Pragma Advisory Services providing to clients. I know that you support clients in wide spectrum of services: market entry, transaction advisory, technology, corporate trainings, different services. But we'd also like to hear it from you, the specific services that you provide to your clients.
So what we provide to our client is first of all, we try to understand the client problem. Okay, life is all about solving a problem. That's what we believe, and our solution that we provide to the table is blended, like I said, with the storytelling and plus finance. So to put it in a service way, on a business term, is we try to provide corporate financial solutions. Right, a company might want to raise capital, or through debt or be it equity, we try to assist them. So and then at the same time, it could be more of market entry strategy, like in terms of if a new foreign investor would like to maybe come in alone, or probably would like to partner with the local investors. So we try to do and design the entry strategy for them. And like I said previously, we've been conducting, before the capital market laws came into place, we used to do and assist clients on private placement, in terms of making sure that they have a proper information that they can present to their investors, and we try to articulate their stories with the proper financial projection numbers, so that they can confidently raise it with their respective investors. So currently, as a firm right now, we're doing this, but we are in transition currently. So for the past 15 months, we've been under a board supervision. We've been running the firm as if it is a shared company, and the sole purpose of doing that was we are in transition to become to join an investment banking space as a premium independent investment bank. So currently we have not gotten our license yet, but we're still in process. We're finalizing our we've finalized raising our capital. We've finalized proper structures. Of course, there was a significant amount of delays on our end. I mean, it's a tough economic environment to raise a capital. It's a very tough economic environment right now, as the country is also in transition. Like I told you, believe me, personally, I have experienced the country in so many ways. Running a business, just running a business, you learn a lot. So currently we're in that transition. Well, once we have sorted out everything, we're going to be announcing it very soon. But we will be more of continuing what we have done so far, but we'll be doing it in much larger scale and a very premium way that people really ascertain and understand what is true value of a proper financial advice. That's our aim when we try to elevate the space as well. Yes.
Thank you. Ethiopia's investment climate is rapidly transforming thanks to sweeping reforms we're witnessing in the introduction of securities exchange, floating currency, and liberalization of priority sectors. Such measures surely stabilizes the macroeconomy and ensures investors' confidence. With a population of over 130 million, significant infrastructure investments, and abundant natural resources, Ethiopia offers appealing and untapped market for investors engaged in various sectors. Having these developments in mind, how would you assess the impact of this recent change brought about in the current investment climate, and what's expected from both the public and private sectors to realize Ethiopia's investment potential?
Yeah, okay, that's a good question. So let me unpack it, answering it one by one. Yes, no doubt. Ethiopia is purely is untapped market. It's a virgin market, right? If you ask me which sector, I'll be very honest with you. In Ethiopia, like look around you, it's a poor country with a lot of problem. Well, one would see it as if a lot of problem, but one as any investor would see it as a lot of opportunity, right? There is 120 million people, the biggest country and the continent. With the, we have, of course, we have had a number of challenges, but the economy is growing, right? In terms of, from a top line number perspective, and then there is a lot of room and a lot of untapped potential that's going to happen in the next coming decades, right? So from that, when you see that bigger picture, that's when you see the opportunity. So all those opportunity to be materialized, it needs capital. Okay, it needs a huge amount of investment, and it needs a huge amount of investment. So just to give you one example, so currently, right now in Ethiopia, I mean, the current estimated population is 120 million people, right? Out of that 20 million people, the 20 million people, they're including artists, people live in cities and towns, right? Adama, Bishoftu, whatever, what have you, right? Addis Ababa is the only place that has surpassed 1 million population dwellers. But no other city in this country has surpassed a city dweller of more than 1 million. Okay, that just tells you there's going to be a major urbanization is going to happen. Of course, that needs to unlock government capital in terms of infrastructure, and other things as well. But when you see that from a bigger picture perspective, the enormity of that 100 million people, out of that, for the next decade or even more, at least another additional 10 million people, another 15 million people, they'll be urbanized. So with that, it brings a lot of opportunities. They need to eat, they need shelter, they need basic things, right? And then you look into the average age, and the average age is 20, right? So this population for the next 20 years, I mean, like if you map out their life until pension, until they retire, for the next 35 years of their life, no, so 45 years of their life, they need to marry, right? They'll be marrying. They need to consume. They need shelter, right? They'll be having kids, right? They'll be sending them to schools, right? And then they'll be working. There is a quality of life. All these things is what each and every citizen is asking, right? And it's going to happen. And then on top of that, and then it is 20 years, at least 25 years until 2050, our population is going to grow up until 160 million. Okay, that's just enormous opportunity right there, right? So now, as a country, what we are currently facing, and I don't think this is properly phantomed, is this population, just like it could be an asset, it could be a liability too. When you see this is a given factor of Ethiopia and Ethiopians as well. So this is a huge opportunity. But changing opportunity into a tangible business, well, there's where the rubber meets the road, right? So if you see it from that perspective, well, of course, as a country, we are one of the most ancient countries in the world. apparently one has to understand that from a private sector, I didn't say public sector, from a private sector side perspective, our exercise is 3 decade years old. Okay, right? It is a 3 decade years old. Everything that we see around here in this country has been built in the past 30 years, except the public companies, right? You'd say the oldest institution in this country is the church, the mosque, and next to that is probably is Ethio Post in Ethio Telecom, right, from a public side. So as a private sector, it is a 3 decade years old experience, and within that, we as a country, of course, have invested on average 30% of our GDP, and most of it used to come from government printing money or government taking out credit from the financial institution, and also expansion of the SOE's balance sheet as well. So that's where it used to be most of the investment used to come in. So of course, right now with the economic reform, of course, it will unpack a huge opportunity itself, but it will take time. To be frank with you, and of course, we as economy, we have a very serious macroeconomic problems. Of course, we have started to address them by taking this comprehensive macroeconomic reforms. So if we see it from an investment perspective, no doubt there's a huge potential. You cannot say you are an African investor if you don't invest in 5 countries: Nigeria, Cote d'Ivoire, Botswana, Cote d'Ivoire, or Kenya and Ethiopia as well. This is where most of the opportunities is there. So, but the biggest problem that we have, and the biggest challenge that we have, is the speed at which the capital is being created on the private side, because of proper public service. The challenge within within our investment legal infrastructures, getting basic things, getting a land, starting your business, getting a power. This requires this is what really requires to change capital into goods and services. So if to answer your question in a bundled way, of course, there is huge, enormous opportunity, of course. And then as a country, there are a number of things that we need to address to improve our investment climate. However, we've also garnered around $2.6 billion of investment, foreign only. Okay, we have. I think when we say investment, people always think about foreign investors, and I think that's a very wrong way of seeing this. One has to properly understand one thing. Okay, there is 4 types of capital creation in economy. Number 1 is when the government spends, taxing and spending. Okay, the other one is when the state or enterprises expand their balance sheet through debt or equity, which means changing the government taxation into equity investment, or they take out a loan, right? And the third part is you and me, local investors investing, right? And the fourth part is foreign investors. So one has to be very cautious in terms of what we need as a country. Okay, what we need as a country is we want our local investors to create that capital. At the end of the day, one has to properly understand that for an investor, it's not a primal need of a capital, but it is an additive to the economy. But in terms of where you add, where you don't have, right? You would like to have the foreign investors in a space and sectors of the economy where you like know-how, experience, capital, knowledge. That's what we want them. But more importantly, when you see it from an ecosystem perspective, the first thing the Ethiopian ecosystem has to work is for the local investors. Because when the local investors are happy, and when the local investors invest a lot of money, the foreign investor comes in, right? That's how the economic machine works. It's not new for Ethiopia. This is how it works everywhere. So from that context, yes, there is a local capital creation. There's a local foreign capital coming in, but is it being done to the level that the country could accommodate, or has it really impacted the potential that the country has? We need to do a lot in that regard.
That's true. Working on the local investors is equally important as attracting foreign investment into the country. But in your opinion, are there any specific sectors that would give better opportunities from in the Ethiopian context for foreign or domestic investors?
Good. Okay, so let me answer it this way. In Ethiopia, literally any sector that you go in, it could be timing. There's a huge need for it. Okay, the question is in this kind of young frontier market, one has to be very wise in terms of what is the priority of that country. Okay, the government set the priority. Okay, so from a government perspective, the government has set the priority in terms of key sectors that the government would like to see more capital creation in. IT, digitalization, anything around revolving around that, or anything around that value chain, data protections, cloud service, softwares, anything that applications, that space by itself, because it has been given a huge government attention, it's going to flourish. Energy, agriculture, manufacturing, right now, because manufacturing is 3% of the GDP. We want to take it, if we want to reach the level of where Vietnam is, we need to take our manufacturing sector from 3% of the GDP to 30% of the GDP, right? So what I'm trying to say is that when you are talking about frontier markets, everywhere you go is like a candy shop. But however, okay, in a country where the government first have to invest in the hard infrastructure so that the private capital could follow. So the government has given enormous attention for this selected key sectors, including tourism, ICT, manufacturing, energy, and agriculture, and then also tourism as well, and ICT as well. So if the government has given this attentions, and also the financial sector, this is where you should follow. Because in a country where infrastructure has not been met, in a country where resources very scarce, especially from a government side, and things take time, you have to follow the government. That's where the opportunity is. Because the first investment that should come in this kind of ecosystem, especially in the Ethiopian ecosystem, where there is significant lack of infrastructure, basic public services, the first thing, the capital creation should be laid from the government balance sheet side, and then the private one will follow. That's how wealth is going to be created. So if you have that prism, I think Ethiopia has its own fruits.
As you rightly pointed out, one of the services you provide as an advisory firm is assisting investors in the market entry stage. Ethiopia has made efforts as part of the homegrown economic reform to liberalize previously restricted sectors to foreign investors. State-dominated sectors like telecommunication and banking are now open to private participants. In addition to that, the devaluation of the birr, the liberalization of the foreign exchange have had a significant impact in encouraging investors to invest in the country. What opportunities do these reforms offer in the current investment climate for investors at the market entry stage, and what potential challenge do you foresee that could impede such an entry?
That's a good question. So, let's say at least Ethiopia has improved our own reputation, because it was very difficult to convince any investor when birr was 58 and black market was 120. Okay, at the end of the day, money speaks, numbers speaks, right? So when an investor comes in, they're not coming here to take a safari here, right? They're here to make money, right? So the conversation are very tough. I mean, it has to be very logical. So one thing I would say is, we as a country, we have improved our reputation. The one thing that we've been very well known as if it is a jersey to us, is this foreign currency issue. The macroeconomic reforms has been enormous uplift in terms of the countries to have a proper engagement with the investors. Most of the investors, basically when they make the decision, it boils down to two things. am I coming into the market too early? I'm just talking about the foreign investors right now, okay? Am I coming in too early into the market? Or should I wait? Right? And the two decisions are based on this kind of reforms. Right? Because everybody knows that what happened in Nigeria, when Nigeria floated its currency back in 98, and then, open up its financial sector in '03, and what was Nigeria back then and now is huge change. That wave of change is going to happen here. Everybody knows that. It's just a matter of time. It's just a matter of who's going to do it, okay, and how it's going to happen. Because it will happen in the Ethiopian way, whether we like it or not, right? Every investor, be it local investor or foreign investors, understand this. So timing is very critical. That's what makes it wise, right? So from that perspective, in our conversation, we try to. This is where we try to navigate. So the recent macroeconomic reforms, okay, it makes things okay. Now it's the right time that I should be in, as a local investor or a foreign investor, because what you do right now would happen or will happen, and you will bear the fruit after 5 to 10 years. Everybody knows this. So I think the biggest thing the country has done is just sweeping in this macroeconomic reform, because it was a huge challenge. In terms of in terms of challenge, let me be very blunt with you, and because I face it, okay, and I'm sure every investor, be it local or foreign investor, face it, is public service. Okay, public service. I think we as a country, we need to have a proper discussion. We need to have good, honest to God conversation about this. Because, like sometimes I, as an Ethiopian, because I feel sad about it, because we took a huge amount of macroeconomic reform, but with the expected wealth creation, investment that we need, both from the local and foreign investors, and both from the private sector, our public sector is nowhere to be there. Nowhere to be there. I'll be very frank with you. If you ask me why, okay, to try to get a basic service from a government office nowadays is getting challenging, right? I mean, now think about it. Getting an ID, getting a title deed, getting basic services that ascertain your ownership, that ascertain your identity, that ascertain your confidence in the country should not be hard. Right? So I think we as a country, we need to address this. So when you talk about land, as an investor, paying your tax, it should not be a problem. There's no private sector or private wealth creation without proper, efficient, effective public service. This has to be underlined. So yes, there are reforms that the government is taking, but it needs to be done in a very grassroots level, because what you're seeing on the federal level and what you're seeing on the regional level is two completely different things. And that's why I said it needs a comprehensive, just like we did a comprehensive microeconomic reform, we need a comprehensive public sector reform, both on the regional level and also on the federal level, because that really stifle private investment. So I think that's the biggest challenge. And of course, of course, don't get me wrong, there's the peace and security element to it. But, the problem that could lynch on is the public sector service, reforming the public sector. I think that's very critical. Because wealth is created when there is a guaranteed, strong, assured public service. Because, don't get me wrong, when you get your title deed, when you get a land, when you get all those services, it's a confidence in the country that you get that service and nobody's going to take it. And then you're taking a confidence in the country's system, right? In the country's infrastructure, confidence. That's what we call it, market confidence, right? So that's very critical.
I agree with your remark, Mered. Even though the government is taking all these initiatives to attract investors, there are indeed challenges investors encounter. The administrative, bureaucratic, and policy issues you've just mentioned have negatively impacted investors' confidence. And I believe this is when institutions such as yours come into the picture to guide businesses and investors and give them clarity. What would be your recommendation for investors and businesses going through such challenging circumstances?
Be honest. Because, we as a financial advisory firm, in the financial sector, I don't care whether you're in banking, insurance, or capital markets, what you're buying and what you're selling is trust. Trust comes out of what you say out of your mouth. If you're honest with your communication, people manage their expectation in the right way. You sharpen their thought, you sharpen their expectations. That's how we do it, being honest. We'll tell them, listen, yes, there's a lot of challenge, but there's a lot of room. A country comes with a double-edged sword. This thing is going to improve, no doubt about that, because the country cannot sustain it. Nobody cannot sustain that. That's the hard given fact. But if you are wise enough to make the investment early on, knowing the challenge and being wise enough how to navigate it, making sure that you create a very important relationships. Okay, it's all about relationships. It always boils down to relationship. And you properly understand how to present yourself and communicate yourself with any key stakeholders, be it the government services, be it your client, be your customers, be your vendors, anybody. We tell them, this is how you communicate, this is how you engage with them. If you want to do this is going to take time, but you have to be very patient. So the way we do it is we are very honest, and we sharpen their thinking, and we sharpen it by giving them honest feedback on the ground, and they will have very pragmatic expectations. That's how we do it.
But you'll also be assisting them in navigating through these complexities and challenges.
Yeah. Because we believe the client first. The client first need to understand this. Okay, so we need to have proper conversation. Once the client really properly understands this, yes, and then we can work on the other details, because the other details are just paperwork. Making sure that do this, do that. Once you have this clear cut thinking how to navigate Ethiopia, and then we assist you formulating your strategy, and that strategy will back up with proper numbers, and then you do your commitment of your investment, and we assist you from that. We take it from there. So that's how we do it. Yes, honesty. Yes.
Your firm engages with clients across various sectors, which are directly affected by the reforms we've mentioned. So it's important to shed some light on how investors are reacting to such reforms. Based on your engagement and experience with investors, could you please reflect on what the perception of both domestic and foreign investors is towards the reform measures taken by the government?
So the way they're perceiving it is as finally Ethiopia has done it. Finally, now we can talk. Okay, because imagine in the old ways, we've managed to create an informal economy which account maybe, this is our estimation, maybe 20% of the GDP. Right? In Ethiopian economy, people get confused. How come people are so, they're struggling, but there are also a section of a society that spends. Why? Because there is a huge chunk of informal economy because of, having two prices, two foreign exchange systems. That leads to two type of treatment from the customs, public service side, investment, doing business, relationships, what have you. So now, because of this correction, what it really does is it captures everybody's activities in one balance of payment, in one balance of shit, in one GDP number. So, and then it also captures the government taxation as well, because it puts it in one coffer, so to speak, right? So the way local investors are perceiving it is that, initially most of our local investor engagement was they were not anticipating it, and most of them, I would say, in our view, they're somehow struggling that the old ways is going to continue. Most people, they don't understand the lag, the time effect of this reform. the time effect of this reform is going to happen maybe after 3 to 5 years. We're gonna see. So the way the local investors should do investment, like getting a lot of chunk of money and then trying it on a building, that need to be rethinked, right? Because now you need to change you need to be strategic enough that before anybody invests in other prospective sectors like such as manufacturing and other potential sectors, you should do it right now, today. So that's what we're trying to tell them. Somehow people are saying they struggle with it. But from a foreign investor perspective, the people that we are already currently engaging with is they properly understand what it means to the country. And more importantly, from their perspective, they're still there's the cultural element. Ethiopia is very peculiar in this element, right? We're not a country colonized. We're not a market exposed to any international trade. So that's how the people view this from a local investor perspective, from a foreign investor perspective. In the past 30 years, the things the reforms that we took 30 years ago was major enough to create all this private ownership, all these private assets, and also businesses as well. And not right now, what we took as a macroeconomic reform also will have the same ramification in terms of economical effect in each and everyone's lives as well, and balance sheet as well.
Yes, it's true that July 2024 is a critical juncture in Ethiopia's economy. I would say among the key reform measures that the government has undertaken over the past few years, this reform related to the forex liberalization stands out as practically noteworthy. But my question would be more of the practical implementation. In your opinion and in your experience, again, how do you evaluate the progress made so far and the practical outcomes in terms of forex availability, convertibility, and transferability? Repatriation has been a challenge for many investors now. So, how do you see the practical outcomes of these reforms in terms of these forex availability and transferability issues?
Good. So from a practical perspective, so let's say this. One thing for sure is that we captured a significant chunk of the informal economy, right? Ethiopia's export used to be how much? $3.2 billion. That $3 billion used to be our jersey, right? Right now we're reaching 7 billion. We're expected to reach 7 billion. So that $4 billion, it was there. Like I said, it used to be running around in the informal one. Now, but because of this macroeconomic reform, the immediate result we got is we captured it. The true potential of the country's export potential that was not reflected, but was there, now is get to be reflected in the country's one balance of payment, right? So that's a big thing. As you said, foreign currency now, where our reserve has gone up significantly, both on the public side and also on the private side. Companies right now, it used to be a dream, and that you cannot take out your profit. It was a big problem. Like I said earlier, it's a big lift off. So now, like that, big multinational companies have now, right now, they have completely repatriated their most of their declared dividends in foreign currency, right? So all these things is that's the immediate result that we got, and then at the same time, the one thing that really captured was that somehow the informal economy is being captured within the taxation system because the government revenue is going up as well, right? And so when you see it from a macro perspective, all these reforms is just what really does is there was two economy in Ethiopia. The one was the official one was the unofficial one. Somehow, because you created one price, somehow the two are coming together. That is a big achievement. So from an implementation perspective, it is getting the expected result. Of course, it comes at a price, no doubt about that. Living cost has skyrocketed in terms of personally, and then at the same time, business-wise, right? Everybody had to revise their balance sheet, right? The government had to revise their balance sheets. The companies had to revise. We're already currently revising their balance sheet, and more importantly, what is creating is creating a squeeze on the personal income, on the business income, and this is part of the process. To be frank, I know it's very hard, but if you see, when you do this kind of macroeconomic reforms, what you're thinking is not one company. What you're thinking is not one sector. You're not thinking of a certain group of people. You're thinking about the whole country and the coming generations. So you have to make a very tough decision in order to get a premium result at the end of the day, right? So is how to manage the shocks. I think that's the most important thing. Manage in terms of managing the shocks. I mean, the government has done a very good job in terms of like making sure that the low income people are not hurt that much. But in our view, the way we see it is, and I think in our view, we strongly believe this. I think the government should have done the moment they did this back in July. They should immediately reformed. They should have reformed the income tax bracket, and they should have revised it because if you've seen most of the income tax, especially on the salary side, the bracket need to be revised, right? The non-taxable income is 650 per. That's just basically nothing right now, right? They should have done that earlier, at least to reduce some of the shock that would come from the consumer side, because you have to understand something. Economy is about spending. Okay, if the spending sort of slow down, there's something wrong within your economy, right? So what you're seeing right now, of course, we are in a very tight monetary policy because we need to shift our money. We are in the transition to interest-based monetary policy, but at the same time, reducing the shocks. We could have taken these measures, and I know that the Ministry of Finance is working on it, but in our view, it should have been done earlier, and then at least it would alleviate some of the shocks. But it is necessary to do the reforms. There's no doubt about that, because the way we were running the country, it was not. I would really doubt that it would survive us for the next. If we have done it for an additional 2-3 years, I think the system would have broken. So it was needed, it was timely, but right now I think, from an implementation perspective, I think the government has done a very impeccable preparation, despite the security problems, despite everything. You can see that the government was so prepared and was a necessary preparation. But at least, in our view, if they have done that, revised that income tax bracket, it would also, at least reduce the shocks, because we still, we need to remove the fuel subsidy, electric subsidies need to be removed, the state-owned enterprises, they need to be separated from the Ministry of Finance balance sheet. So all that things, it will have a huge ramification on people's spending and people's pricing, and everybody had to revise their prices. That's the expected outcome. But at least, while you're doing this, but just making sure that, of course, the government is going to take a bit of a hit on it, but I would say it was in our view, would be a sort of necessary hit.
How about the impact on large-scale projects? Because bankability for large-scale projects, particularly projects in infrastructure, energy, mining, industrial projects, has long been a challenge for Ethiopia, primarily due to the limitations in access to forex. And these constraints have deterred long-term financing, and critical projects were being delayed due to these bankability issues. How, in your opinion, again, how do you see the impacts of these forex reforms in improving the bankability of these projects and their implementation?
That's a good question. So in the previous system, because we have two forex prices, there is only one room for short-term, and that room is short-term capital is being created. So this kind of sectors, energy, agriculture, what have you, they need long-term capital. So it does not create a conducive environment to be created, right? So I think the first thing this macroeconomic reform has done is it's created that price predictability, let me call that. Price predictability. I have to be very careful with my wording. Price predictability in terms of forex, because we floated the currency. Now it would be driven by the demand and supply, and we know what would affect the demand and the supply of the country. So now you can think long term. Now you can plan long term. So now capital can come in safely. So at least can come in confidently. So I think the first thing that it did is creating this reform is now people can think of creating long-term capital or investing in long-term capital. So I think in our view, we would expect, as the securities problems sort of get to be resolved down the line, I think more of the capital is regarding energy and mega projects. I think it's gonna come not just only from foreign investor side, but also it will create an additional space for the local investors to come in as well through the capital markets, because that's the reason why we created the capital market after 5 decades, right? The economy needs at this point long-term capital. But we've created the market, we've created the trading platform. The macroeconomic reform has done is created the conducive environment. So now people can come in and invest in the long-term capital so that we can unlock this long-term potential investment in the energy sector. So these things, it definitely builds confidence. It creates predictability. Now people, of course, you can see it. People are thinking about it. People are discussing about it. But of course, we're in a very early stage. But we'll see it.
Yes, I think we've seen an early sign of a renewed of renewed momentum where
renewed interest.
Yes, products which were previously suspended are now reportedly resuming. So we're seeing progress. But do you think these FX reforms are directly related to the change or the impacts in terms of enhancing the bankability of these projects and de-risking and recapitalizing the capital-intensive projects?
Yeah, it does. But forex is everywhere. The price of forex, it affects you, the way you consume, the way you invest, the way you interact. So having these reforms, obviously, it increased the bankability, the feasibility of this kind of project. And more importantly, it creates more than the feasibility, the way we see it is the confidence. Because without the confidence, without trust, it's pointless to discuss the feasibility, because I'm not confident about it, right? But at least we've established the confidence. So we've established the confidence that any investor, be it local or foreign, they can come in, right? They can get their return. Because there's confidence in terms of there's one price. For foreign investors, when they come in this big capital, they can take it out. That create that confidence. So now we can properly discuss into the feasibility, and the feasibility is going to make sense in terms of numbers, because you're not going to be talking about two foreign currency exchanges, right? Because your currency has been properly valued, and you're doing your project on that basis. That gives you predictability of returns. So, definitely it creates confidence. More importantly, that's what it does.
Mered, among the sectors we've mentioned that underwent substantial reform is the banking sector. The biggest challenge that frequently emerges in executing big projects in Ethiopia is securing long-term finance. The existing local banks are not capable of extending long-term loans since the projects involve a huge amount of finance. However, with the anticipated entry of foreign banks into the Ethiopian financial market, it's expected that this financing gap will be addressed. How will this reshape Ethiopia's financial and investment landscape, particularly with regard to improving access to long-term capital and enhancing investor confidence?
It's a huge catalyst. Let me say this. For a good reason. Ethiopia has done the right policy to close its financial sector. It was a good policy. Don't get me wrong. With that policy, because we closed it, we've created 30 private banks with 450 people being the owner of that bank. Less than 5%. Most of them, they could own up to 5%, but most of them will own less than 1%. And we've done a very good job, don't get me wrong. We've raised that capital from each and everybody's retail investors' pocket of money. Right? That's good. But right now, with the way with the economy going and with the banking culture that we have currently and their balance sheet size, they're not going to take us. They're not going to take they're not able to carry the country to the next chapter of its economic reform. They can't. Let me give you a good example. You know, Coca-Cola, like 6 years ago, they did their new manufacturing plant, and they had to take a loan. I think it was Standard Bank, and they took $300 million loan. Okay, there is no private bank in Ethiopia that could accommodate you a loan of $300 million because their balance sheet size is way less than that, or probably equal to $300 million. Okay, in a country where you have $113 billion of GDP, growing with an average of 6 to 7%, okay, and needs dire needs in terms of its young population with all the demographics and factors that we mentioned, it needs continuous, consistent creation of credit and capital. That needs bigger balance sheet and a strong bank system. Okay, so that, and then in a country where you have 30 banks, okay, and only 4 of them are above $1 billion of a balance sheet, and the rest of them are like $500,000, maybe some of them $100 million. It's nothing, right? Even right now, the government is running around to get a loan of $600 million to finish the Koshai project. There's no bank, there's no private bank that can provide this. If I were a bank local CEO, instead of giving loans to the private sector, the most profitable venture that I would love to be in, providing loan to the government. Because I write a big chunk of check. I know that it's the government that's going to pay me. That should be the right mentality. But there's no banking system that could accommodate that. So I think, like I said, for the right reason, we've closed it. But now I think it is long overdue. Now is the right time to open it up. What we're advocating for is a bank that understands the old age wisdom of making money. That's it. That serves the entire country. Okay, that has bigger balance sheet. Okay, that has proper technology, that enables financial inclusion. Okay, that has impeccable customer service. Okay, that has good know-how, knowledge. That not only that bank me in here in Ethiopia, but when I do business in Djibouti, that can also bank me in Djibouti or South Sudan. That's what we need. That's what the country needs, right? And in order to do that, you need to invite competition, right? The best intervention that you could do as a policy, as a government, is just invite competition. So when you invite the competition, people start to think. Banks they're a very integral part of a society. I mean, next to the state, the central bank, the most important institution in a country is the financial system itself. Financial systems are like, a country's sovereignty does not only get to be expressed because you have military on your border. It get to be expressed because you have a strong financial institutions that enable and create wealth for your countries, for your countrymen, and owned mostly by your countrymen that are strong. Your sovereignty lies there too, because country's ability to be able to create its own currency and be able to be borrowed by its currency is where the power lies. The power of creating wealth lies. The power of having you as a state respect lies. So this is very important. People they don't understand the bigger picture. So I'm confident enough to see that the way we were running the banking system was not right. It is expected to create that catalytic effect in terms of making sure that our banks get stronger and become even more larger, bigger, stronger, more inclusive, more understand the old age wisdom of making money. And then the local banks, they should know one thing: they need to upgrade themselves. But that's it. They need to upgrade themselves. And I'm sure, and with the recent reforms that the central bank is taking in terms of implementation of Basel II, making sure that their balance sheet is not underwater, because all those malpractices that we did, overinflating our asset, taking out a loan, all those bad practices, I think that need to be cleaned out. And we're expecting that if the local bank does it properly, where if there is mergers need to happen, no doubt about that. I think properly taking these reforms, I think it creates a huge opportunity, and we want it so. Don't get me wrong, but it has to be done in the right way. I think in our view, with the reforms that the National Bank of Ethiopia is taking, we're very much confident that they're going to do it in a very right approach, because they're taking a huge lesson from Nigeria and other markets, also Kenya. So and the local banks, they need to reform themselves. Just like they need resurrection, sort of a resurrection type of way of doing things and doing business. Yes.
So the other key financial reforms in the country is currently the capital markets and the alternative way to raise funds for businesses. We've seen that already investment banks have been licensed, the Ethiopian Securities Exchange have been launched. How do you see these developments? And specifically what I wanted to hear is what roles is Pragma Investment Advisory playing in terms of supporting clients and stakeholders in navigating this evolving capital market environment in the country?
Yeah. So in order to do that, first we have to get a license, right? So yes. But in terms of the way we see all this development, it's timely. We've been waiting for it, and we cannot wait to be part of it. Don't get me wrong. We cannot wait to be part of it. Of course, we'll be part of it and leave our mark as well. There's no doubt about that. Great things take time, so we've been very much patient, and we'll come at the right time. So, but in general, when you see it, it's a relief. I'll be honest with you. For me, especially as a young man that aspires towards for my country to have a capital market, to see this and to live in it, breathe in it, it's a relief, to be honest with you. Of course, we are in a very early stage. Yes, there is an enormous amount of work expected, both from the regulator, both from the exchange, and also, more importantly, the participants, right? I don't like to say people are not financially literate. I think that's a very bad term. What we need is financial exposure. People really know, they know what really serves them good. They know how to make money. Our country people, they know what to make money. They know that's why they invest their money in cattle. My brother from Afar is way millionaire than me. Okay, me driving instead of a Vitz here, because he has 20 camels, and one camel would fetch him 700,000 per. He's a millionaire, right? But we have to be able to not to convince him, but to expose him that in Addis Ababa, through your phone, you can buy shares by selling one of your cattle, just diversifying your investment, and getting that 700,000 of cash. Maybe you do something for the family, but you can take out that cash, lend it to the government, and get 16% annual return on it, or invest in a company, and then get your dividends. They need to expose to that kind of information. So I think culture, the way you speak, the way you address this market is very much important, and we need to unlock two things. First of all, is we need to revise the tax. You cannot have a capital market where you have in your tax code that you'll be taxing me 30% on my capital gain tax. That's not right. We need to revise that. And I'm sure the regulators are very well aware of this, and the government is working on it. So we need to address that immediately, because still people are very skeptical in terms of putting their money into the investing, because of all these things. The way we have our relationship between the citizen and the state in terms of taxation is not a healthy relationship, and we need to have a proper relationship. So I think creating a conducive environment around especially taxation in terms of, because mind you, on the current tax code, the government tax you when you're making investment, right? That's just not right, right? So we need to clean it out immediately and make sure that it is very conducive. Not only conducive enough for capital gain tax perspective, but it has to be conducive enough or incentivizing that you need to reduce the corporate income tax so that companies could list. So we need to be. I think we need to do that, and I think that's very much important. And that the last but not least is that we need to unlock our institutional investors, because most people, they get to be deceived, or I don't want to say deceived, but misperceived, that we have a 2 trillion or 2.5 trillion per worth of savings, right? But that most of the savings is, the number one saver is the pension funds. They have 450 billion per. But right now, most of it is stuck with the government T-bills. So not immediately, but gradually we need to unlock it and make sure that the pension fund comes through the capital market with not only one broker, but a multiple broker, so that when they're buying treasury or when they're making investment, but it also, develops the entire ecosystem from a brokerage fee perspective, buying and selling perspective, from a liquidity perspective, and wholesale investment activity perspective. Insurance need to be reformed. We need to have collective investment schemes. So all those things we need to look at, because the IPO of Ethiopia Telecom, that's what really shows. The raising capital in Ethiopia is so tough. Why? Because it is a retail investor dominated market. So and that's how we're going to start the capital market, whether we like it or not. So, but we need to unlock our institutional investors, and so that they are dedicated to the capital market in terms of, they have the long-term capital better than the retail investors, right? But the space will, of course, the capital market space accommodates both the retail investors and the institutional investors. But we do believe that we're gonna get there. I mean, of course, the government is committed to that. It's gonna take a bit of a time, but it's gonna get there. So, to answer your question, is the capital market is the missing link in the Ethiopian. It used to be the missing link in the Ethiopian economy. Now we have a pipe within the economy that circulates efficiently, expected to allocate capital as the economy grows.
I wanted to explore more on the tax-related issues. One of the key services that you provide is transaction advisory. So my question would be, because you raised this tax issue, how do you see the flexibility and adaptability of the legal? I know you're not a lawyer, but your services would necessarily require legal analysis. So how do you evaluate, assess the flexibility and adaptability of the existing regulatory and especially the tax and the legal environment in terms of implementing the different types of transaction structures? Because, for instance, if we see share transfer, asset transfer, different types of corporate structurings, even corporate financings, there are different structures, transaction structures that we see in other jurisdictions. But when we come to the Ethiopian context, there are different regulatory considerations when advising clients on deal structuring and transaction advisory services. So do you think the current legal and regulatory framework, the tax framework, would accommodate such deal structuring needs?
Oh, it needs major overhaul. I'll be very straightforward with you. Yes, it needs major overhaul. I mean, you know it better than I do. That is quite a mess, right? You come up with, we as financial advisors, we come up with the best structure, and then the lawyers and then the auditors, we're gonna pick it up, right? That's how we approach it. But the moment we come up with the best structure of structuring a deal, the lawyer comes in and then says this, and then you revise your number and the cost of capital goes up. And believe me, we as a firm were experiencing it during the raising of the capital. It was quite a nightmare, and that's why I said it needs a major overhaul. Our tax code needs a reform. It really breaks my heart when a startup try to raise a capital from angel investor. Forget venture capital. All of a sudden, because they're raising it with premium shares, some Ministry of Revenues, they're looming under a fear of 30% income tax. As if because the investor is putting money to invest in your company, the government is going to take in 30%. That's not right. And then at the same time, the way you defend your tax, taking 50% out of you, and not being business friendly is not right. So somehow, the tax code, I think, in my view, it needs a major overhaul. That's what I can say.
As a concluding remark, Mered, what strategic advice would you offer to prospective investors looking to enter the Ethiopian market and to the existing businesses struggling with the challenge that we've discussed?
Be very wise. What I mean by that is see things long term. Simple. The country is going under a huge reform. We are in process. If you pick the right sector, do the right thing thoroughly, be patient, you're gonna get rewarded. You're gonna get rewarded. That part I'm very much confident. About the country, I'm very much confident about my country as well, despite our challenges. Just be wise. Don't do things multiple times. It's not a country where you do invest in. If you're an investor just sitting down in your sofa, you could do that. I mean, there's an entire capital market coming for you. But as an entrepreneur or as a local investor who is engaging in business activity, don't do too much here and there business. Just focus on one or two sectors. Get it right. Do it right. Be patient and have a very long-term view in the market. You'll get rewarded. No doubt about it. I'm very much confident about my country on that regard.
Thank you very much, Mered. It was a pleasure having you here. I really enjoyed our conversation.
Thank you.